pushing its terahertz vision technology closer to automotive serialization with a crucial new partnership. Teradar recently announced a paid technical evaluation program with a top German automaker for its flagship Summit sensor. The sensor will be tested against edge cases that continue to expose the limitations of cameras, LiDAR and radar, including detecting a fallen motorcyclist at a distance or identifying stopped vehicles ahead in dense fog. The paid evaluation follows track testing in Germany earlier this year that validated Summit's range and performance fit to the requirements of today's sensing stacks. Teradar's mass-producible, low-cost B1 sensor is scheduled to be ready for demonstration at CES 2027. With more than $100 million in backing secured last November and multiple original equipment manufacturers expressing interest, Teradar's next objective is straightforward: win a vehicle program.
You know, so much has been talked about the parcel business. It feels like FedEx has had some of those big issues. Years ago, they had the TNT business that had significant problems. This Vietnam story is quite interesting, Julie. Any thoughts about just everything that's going on? You know, we opened the news headlines around C.H. Robinson, their AI investments. They've gotten a ton of credit for that. But also, there's been some news about C.H. Robinson is now being named in that big lawsuit down in Florida where the driver went through the U-turn and caused that horrific accident. It's interesting because that lawsuit's been amended. C.H. Robinson said that they were not the ones that chose the carrier. So it's going to be an interesting to watch.
Yeah, that will be interesting. I think that the bid board X, the interesting part is that it's contractual freight versus spot freight that they're matching. So I assume it's freight that they already have from shippers in their network that now they're trying to just go ahead and convert and lock in rates with carriers to have that consistent capacity. So it'll be interesting to watch, since it's a little bit of a different take with it just not being transactional freight, but more contractual.
You know, it's interesting, C.H. Robinson for years, and really, you know, this goes back a decade when, you know, Convoy and the Uberization, that Uber freight, you know, Uberization is the term everyone talked about in those days. When that was real hot, the idea that you could digitize on-demand freight, they would talk about the fact that over 70% of their transactions didn't have a human touch. That was a big point of pride for C.H. Robinson. Seems like there's so much contract freight that they're participating in, and that's been really the lifeblood of brokers, is going beyond just the spot opportunities. When I was running freight boards and we were C.H. Robinson's largest carrier, it was either the last minute on-demand things where we could charge whatever, the rip of the day, it's where those came from. We did a lot to that C.H. Robinson. Or it was sort of the backhaul stuff that you just had to move a truck.
Yeah, I think the repeatability is going to create more revenue versus it being, you know, one transaction.
Yeah.
So seeing that match, and they said there's still going to be human interaction, will be interesting to see. It makes perfect sense. If they're moving it, they know it's repeatable. Why not see if there's capacity available and get it locked in and have a person come in at the end and make sure that all of the freight characteristics line up?
Yeah, I remember back in the early 2000s, you know, where brokers did not play a primary role in the routing guide. In fact, Armstrong and Associates said that 6% of freight back in the year 2000 was handled by freight brokers. And the number at least is 30% today, if not bigger. I mean, Triumph once told me that they thought the number was as high as 50% is handled by a freight broker. We can probably attest that at least 30% is. But it's interesting because I think freight brokers, when they're bidding on freight, today it's not just about those spot opportunities, those last minute opportunities, or these low priced opportunities in backhaul markets. They want to play a primary role in routing guides, but they've got to operate when you have these very large shippers. The process of actually going through and bidding freight takes a lot of work and a lot of effort. And so I want to bring our next guest in. John Ferguson is the CEO of Pivot Supply Chain. John, we've been talking about just a couple seconds ago, just the evolution of freight brokerage. You're on the front lines and you have a fantastic X account. By the way, for those that haven't followed John's X account, he's got this inverse upside down. Is that you? I haven't turned my phone to see if it's you.
That was me on vacation. So
okay, well, I remember when I saw your account, this was, I don't know, a couple months ago, it feels like, where you started, I'm like, okay, this is just somebody that's going to come in there and just a bunch of posts, like shit posts that we're going to get from you. Yeah. That's not what you've done. No. You've gotten a little bit of that, but when I first thought when you joined, it was all going to be like snarky posts, and I think you may have intended that, but you have become one of the most effective voices in freight, like in terms of what freight brokerage looks like. And
Sure.
You've been so effective in providing sort of on the ground market intelligence. I think it's been pretty remarkable. So congratulations.
Thank you so much. And yeah, no, when I first started out on X, I was not my intention to shit post, as you put it, but I just wanted to, I just wanted to post a little bit, and you actually retweeted a few of mine, and I was like, okay, let me keep going. So you've had an influence on me to moving to Chattanooga of freight brokers and transportation companies that are actually here in Chattanooga. So it made me look at it, and then you motivated me too with retweeting my stuff. So I just kept going, and yeah, I've never wanted to be snarky, or it might have come off like that, but no, I'm posting what I'm seeing and what I believe in. And yeah, it's been going great.
At first, I thought it was a fandom account, and it was just going to be making fun of the culture. And I think some of your first posts actually were that, a little snarky about, I love the I am the greatest, I am the greatest broker ever. And it was like, this is bro culture, because everyone who's been in freight, there's a lot of bravado in this business. It's where the freight bro statement comes from. But let's talk about Pivot specifically, because you founded the business.
Yes.
Tell our audience about the history of Pivot.
Yeah, absolutely. So I started in freight brokerage in 2011 at a company called Circle 8 Logistics. That company was sold to Global Trans in 2019. I worked there for a little bit, and then was let go. And then I started Pivot shortly after, at the beginning of COVID. People told me I was crazy for starting it during that period. But, I was in an office in my basement.
And where was home for you?
So I was in Naperville, Illinois.
Okay, so Chicago metro area.
Chicago metro area, yeah. And I started by myself in a coat closet. And actually the old owner and founder of Circle 8 came to my coat closet office and said I'm working in a coat closet. So I thought that was funny. But yeah, I started there by myself for a really long time, for years. Had to establish credit, had to beg factoring companies to work with me, had to prepay carriers from my own bank account. So I didn't only just have to sell loads, quote customers, cover the loads. I had to call the underwriters at the factoring companies to get them to give me $1,000 or $2,000 so I can get that credit established. And it takes a full year to get that going. People don't realize you can't just hop into brokering. So I did that, and yeah, luckily I've had a lot of success, and a lot of the people that worked at Circle 8, now Global Trans, moved over to our team. So we have a team of really, actually the guy that hired me, Neville Rajpakar, in 2011, he came over to our team as well. So we have a very robust team of very talented individuals that have a lot of experience in freight. So it's made Pivot even grow more.
How many of those folks are based in Chattanooga?
Yeah, so we're actually closing the Naperville Lyle office. We're moving everybody down to Chattanooga. So that's when I posted. I said, hey, I'm showing one of my guys your house.
Hey, that house is available for anyone who's looking for a house in Chattanooga. Not my house. My son grew up in this house, and his mother is getting married. And so it's opened up this opportunity.
Yeah, no, we're focused on Chattanooga explicitly.
How big is the team?
Yeah, so we have about 40 to 42 people total. No, not in Chattanooga, but we are moving everybody else. Yes.
And where's your offices? Are you?
Yeah, we're about 5 blocks east of here. Yeah. So yeah, we're not far. I could walk to my office.
What's amazing about downtown Chattanooga, for those that have not been here, if you walk downtown, you will see a bunch of major freight brokers that you know. And what's interesting is, I feel like every time I walk down, the Gilman Grill is a place that we have lunch here. It's like the only sort of walkable, nice restaurant downtown during the day that you can go to get a steak. And what's really interesting about it is I always see new names pop up. I mean, TQL opened an office here a couple of months ago, or maybe a year ago, that popped up. But you're just seeing this sort of fluid community. And I always tell people that don't know the Chattanooga story is, while Chicago may have more companies based in that do freight, it's so spread out, and the chances of you running into another freight broker at a bar or restaurant, or I think Danielle, who's on X, has a pretty prolific account on X, has talked about when she comes to Chattanooga, it's the only city where you can overhear people at the bar talking about freight. Like, that's the conversation. It's probably very similar that if you go to New York, you're hearing people around Wall Street talk about the stock market or fashion, or in Hollywood, Los Angeles talk about Hollywood. politics in DC, this is a city that it is freight moves the city.
I went to lunch and I ran into Ryan Rogers, CEO, founder of Texocate. I was like, is that Ryan? So
it's awesome. It is a great town, and like we're proud to be here. We certainly have been a part of telling that story. We have the sort of the opportunity, the luxury, if you will, of being able to tell Chattanooga's story. And it's interesting because the city did not embrace that story early on as much as we would have liked, but we've had to sort of remind them how important it is. But I do think it's really exciting.
Yes. Yeah, every day on my drive into work, there's inevitably I will see someone walking in a TQL t-shirt or some broker t-shirt.
Shout out to Michael Caney. I honk at him when I see him walking across the street.
That's good. Now you on lookout? Is it?
No, I'm on Signal.
Oh, okay, got it. One of the mountains for those that don't know what we're talking about.
All right, so let's talk about the freight market. What you're seeing, what brokers and shippers should be doing now, and what you think for the second half of 2026.
Yeah, absolutely. So as everyone knows, last month, starting right around the DOT blitz, demand surged, right? And supply was already kind of taken out of the market from a lot of the factors that were going on, from DOT blitz, ELP, non-domiciled. So a lot of that took a lot of capacity out, but the demand surged is what I saw. It was, and you saw me posting on X, you couldn't find, like all the carriers and drivers and people will just pay more. Well, that doesn't help if you can't find a truck. So I've just been kind of keeping an eye on the volumes in the market. And around June 5th, I noticed that, hey, the volumes all of a sudden just plummeted that day specifically. And then so we've been kind of attacking the market aggressively by going after spot loads, taking more contractual loads, loading up as much as we can, as we say in the brokerage world. And, just we've been very successful the last 2-3 weeks with that strategy. And yeah, it's been going good. I definitely expect with end of month, end of quarter, the 4th of July holiday, and even some companies have end of their fiscal year coming up, that I expect the demand to surge next week. But so far, it's been a steady ride the last 3 weeks.
What do you think that is? June is an interesting month because it's sort of that mid-June slump. We see it in the data historically, but is there anything special about this? I mean, you posted today and we see it in the data. It just feels soft.
Yes.
I mean, it's all relative, right? We're still near all-time record highs on rates.
Right.
Tender rejections are still 17%.
Yes.
But it has softened.
Yes.
I'm a little surprised by the fact that we haven't seen it sort of, I would have expected by now we would see things sort of move towards that end of the quarter. But any sort of insights on why you think that's the case?
I think you hit the nail on the head, Craig, because the market is still tight, right? The supply that's out there, it's less. Demand has just really went down at this moment. So that's really what I've seen. I just had a lot of the shippers were trying to get all of their freight out. It seems like at the end of May, they all knew the DOT blitz was coming up, and I see it in your sonar charts all the time. If you go back and you look at May, you'll see there's this huge dip in volume. It's like a little pocket right there, where it looks like everybody avoided DOT blitz week. They're just like, we're not going to ship anything, and then they pushed it all to the next week, and it just seems like we never caught up until about June 5th, that first week or so of June.
There's that huge volume pop at that first week of June, where you can see it in the data. And in fact, it was interesting because going back to June 5th, I don't know if we've got that chart. We can show the tender volume index. The interesting thing was it has this huge surge.
Yes.
And I called down to our head of product, his name is Will, and I said, Will, this is legit? And he's like, it happens every single year. You see this sort of hangover from Memorial Day, and then it sort of cools off. And it has cooled off the last couple of weeks.
Yes.
I want to just get your take. In your perspective, in your view, this is just a calm before the storm. Is that the way you're thinking of it?
I do think of it like that. I know.
So let's pull this up real quick. I just want to show it because I think we've got it. As you can see, that big surge after Memorial Day was that dip, as you mentioned, road check week, a dip sort of that mid-May, and then you had this huge surge coming out of it.
Yep.
But it happens every single year. You can see it last year, you can see it the year before. Every single year you see a big push after Memorial Day. And it just feels like that mid-June, a little bit weak. But we've got, July 4th. Is Juneteenth, which is a relatively new holiday, is it a factor for shippers?
Not that I've heard so far. in shipping, it seems regardless of if there's a holiday or not, it seems like we're always on call 24/7. Even Christmas, clients expect you to be tracking their loads, send updates. It just never stops.
Some of my best reps were on Christmas Day or Thanksgiving Day when I was running a freight board. John, you have posted some fantastic content. For those that don't follow John on X or not on X, he's a fantastic follow, probably one of the best follows. Supply chain CEO, he's got the upside down head. You can see him there. But what I love about what you do is you've taken this as an opportunity to provide an on-the-ground truth of what's happening in the market. And look, we have amazing data, but we are not foolish and arrogant enough to say that we can't find sources.
Right.
We look at DAT's data as well, just to sort of make sure we're triangulating things. I think it's important to do that. People should always have more than one data source. We certainly do. But one of the things I love about what you do is you provide these sort of on-the-ground channel checks. Every single morning you come in, and throughout the day, we sort of get an update from you on how many loads are posted, not the load to trip ratio, but actual posting numbers. And you talk throughout the day whether things are getting more or less. I think it's a really effective way for those that are sort of wanting to see the pulse of the market. You're doing that every single day.
Yeah, absolutely. And I started really diving into that because I needed to find an edge, Craig. Because that 3 weeks, DOT blitz, post-DOT, Memorial Day hangover, all of those, it was just absolutely just terrible. For carriers, it was fantastic, right? Rates are surging. No issue with that. I love it when carriers make money. I want everybody to make money. But when you have these contracted lanes and you're like, oh, okay, I'm moving it for this, and then that lane price doubles, it's a lot of shock to you. So I was just looking for an edge on how we can kind of capture some data and notice the trends in the market so that we can try and capitalize whenever we have the opportunity. And for weeks there, it stayed very, very high and it never came down. And then finally I saw this on June 5th, I just saw this cut in half. I'm like, guys, I think it's time to start pushing and going to get some more loads. We did based off of the data that was provided, and we've been having a very successful June, and it's our best month to date.
Well, I love when people build in public, and I love how you share your updates in public, how you're talking about the way the market is looking, what you're seeing. I think it's just so important. You had a post last night, and I want to get into this. Sure. The post is that you talk about bidding on freight. Sure. The idea that if you're going to a Fortune 1000 someone spending $1 billion on freight is probably closer to the Fortune 100s. Right. You talked about you went into this company, you were in bid process for a year and a half. You finally have secured some business for them. For those that are perhaps emerging freight brokers, aspiring to become a freight broker, new to the career, or just folks that don't know what that corporate bidding process looks like. Talk a little bit about what that experience is. Provide some guidance for how people should understand that process.
Absolutely. The sales cycle for brokerage is a very long time, maybe a year, 2 years. I have one that I finally just got after 3 years. So it's a very, very long process, and it's no longer just picking up the phone and just dialing as much as you can. Most of the shippers today have 2 phones. Every shipper I meet has 2 phones. They'll give you their good number, and then they'll give you their fake number
to everybody else. Probably got an AI just to act.
I have shippers listed in my phone. I have like the number that I got through Apollo or Zoom Info. I have that number, and then after I actually
meet phone,
right, and then I have the number where when I actually meet them,
cell phone,
I put it in my phone as good number. Yeah. So, but I have multiple of those. But you got to go to conferences. You have to be on social media. You have to present yourself as a thought leader or somebody who has expertise in the industry. They're not just giving these awards to people that are calling them up on the phone just randomly on a Tuesday, right? They want people that they can trust, that they believe in, and you need to show it. If you go look at some of my LinkedIn posts, I'm posting our scorecards, I'm posting our credit for the company. So they want to work with companies that they can trust and believe in.
And what is it? Go ahead, sorry, Julie.
So, and the process, I mean, to be totally clear, this is the process in the long sales cycle for getting contractual freight from an actual shipper that you can depend on and know is going to continue to come regularly versus just getting your foot in the door with some transactional or spot business.
Correct. Yeah. So we're looking for the contractual, companies. that can provide long-term business throughout the year, right? So our goal is, I'm very clear with our company that, I want to be $1 billion company. And I know I did posted like, I'm the greatest freight broker.
I love that.
I
love the bravado.
I really believe that. And I know, maybe I'll get some stuff on that.
There's a lot of people who believe that the greatest freight broker.
But so I'm really pushing for enterprise clients. That's what I grew up on. That's what I started in tracking loads when I first started in the business. Went to sales, went to carrier sales. One of the guys on our customer side quit, and he had our largest account at the company. I literally said, guys, what's the login for this thing? And I just started spot quoting their business right there. And the owner's like, who's doing this? And I said, it's me. They're like, oh, these are great loads. Just keep doing what you're doing. You're no longer in carrier sales. So I've been able to learn every single part of the business. And, my expertise is enterprise clients, scorecards, on-time delivery, contractual bids, long-term. So that's what we focus on. And then once we get in, I think what happened over the last 3 to 4 years with the soft market, with the oversupply, is that everyone kind of got complacent because you could take all of the contractual freight that you wanted and cover it pretty simply. Now you're in this market, it's not easy to cover, and people are falling off loads, and we have just a lot of opportunity in the spot market to capitalize, and that's what we're doing.
John, we got to get a break, but
Sure.
Before we go, and we got to have you back. First of all, your posts are great. People should follow you.
Sure.
Supply Chain CEO on X.
Thank you.
Be sure to follow John. Great resource. You have some great advice, but you've built a $50 million broker really since COVID. You did it yourself. You did all the work. You literally were cleaning the floors, taking out the trash, as well as booking the freight. What is one piece of advice you could give someone that wants to build a business? What does it take to do that, to get to where you're at?
Absolutely. Well, number one, and this is just a given, you have to work 24/7. As a CEO, my wife or friends, they're like, why do you work so much? You should be working less. You're the CEO. I said, no, that means you work double. And, the credit goes to my team as well. They are some of the best people that I've ever come across. Some of them are from US Express. They've met you guys at Julie. So they're fantastic, but you got to have a good team, good management team that is able to train and follow SOPs. So work hard and don't take it all on your shoulders and try and do it yourself. You need to trust the people around you to get their job done as well.
Yeah, and for Shut Up for Chattanooga, you mentioned US Express, but one of the great things that I find that's been so successful in this community is these are destination jobs.
Yes.
Freight brokerage is a destination job in Chattanooga, not so much in other cities, but you also get this fantastically, I said this when US Express was sold to Knight Swift. If you go look at this community, it was a fantastic academy, even despite some of the challenges at the end of its sort of independence when my father owned it. It has trained so many people throughout this city. Yeah. You also have the benefit of Covenant doing the same thing, Kenco. You have the Access America folks. This recycling of talent has been so instrumental. And look, you're the next generation of this, so we're really honored to have you here. We're going to have you back in studio, John.
Absolutely.
And we're definitely going to bring you back to talk about the market as things change. Hopefully, we'll start to see a little bit more robustness. We'll hear it from John as well as Sonar. We'll be right back we'll be back with messages right after this.
It's National Safety Month, which makes this a great time to ask how your fleet can prevent more accidents. Samsara AI detects risks in real time, giving teams more visibility into what's happening on the road and more context to coach drivers before risky moments become incidents. Fleets using Samsara Complete AI Safety Solution have reduced crash rates by nearly 75%. See the data behind the results in the Samsara Safety Report at samsara.com/freightwaves.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me, and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited, and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
Welcome back. We have Aaron Decker, the CEO of Multi-Service Fuel Card. Aaron, fuel is absolutely probably the most important, and particularly energy prices and WTI and what's going on with Hormuz has gotten so much attention. One thing I love about you, we're having our friends on X today because you also are someone that has sort of taken and doubled down on the X platform as a resource. For those that are interested in learning about the fuel market, Multi-Service is an amazing resource. Before we talk about what you're seeing, I'd love for you to give us 30 seconds about Multi-Service for those that aren't familiar with it.
Yeah, hey, great to be here. Thanks for having me. Multi-Service Fuel Card's been around since 1978, first fuel card in existence to offer real-time transaction authorization. Since that point in time, we've built out a fully developed closed-loop payment network that allows us to basically work with any fleet in the United States and North America for that matter. So we're based in Overland Park, Kansas, always have been. And are excited about being a part of this industry and certainly helping trucking companies and figure out how to maximize efficiencies with their fuel spend, and something we take a great deal of pride in doing so.
Now, Aaron, Multi-Service has been around for many years. As you say, you're the OG of that real-time transaction processing. Yep. But recently, the business has shifted. You and management have bought the business out. Tell us a little bit about that.
Yeah, so in 2021, we were acquired by Shell USA, and we were stood up as a portfolio company, and they went through a bunch of changes within that company and kind of a strategy shift, and decided they wanted to move away from the fuel card business because it didn't align with what they, in the direction that they were moving, and particularly in the OTR space. And so, we had a lot of conversations about, what it might look like to do a management buyout option. And I worked hard at finding some partners that I trusted and felt like could help deliver on the promise and potential of this business. And we were successful in getting the acquisition across the finish line. It's a pretty remarkable opportunity. And, I've been with this business in one way or another since 2012 and kind of in a leadership role since 2017. And so it's important to me and important to the people here in Overland Park, Kansas, that we put our best foot forward and really work hard to, not only put out a good product and great reporting and everything else associated with our business for our customers, but also that this business continues to thrive and be a part of the trucking and the trucking industry as we approach our 50th anniversary of being in business. So I'm just thankful to Shell for giving us this opportunity to be able to acquire the business and to move it forward.
So, Aaron, I want to talk about the importance of real-time visibility. A report out today says fleets on a monthly surcharge reset schedule may have lost up to $168,000 in unrecovered fuel costs during the surge. So how do fleets protect themselves from this?
Yeah, you have to pay attention to, the contracts that are being written, and as well as, what you're doing with your fuel program, right? And the best thing that you can do is make sure that you have really tight relationships, not only with your fuel card provider, but the merchants that you're fueling at, right? And have awareness of what the market is doing and what they're seeing in the market, as well as the best way to save money on fuel. Anybody that's operating in this industry right now that's utilizing a fuel card isn't paying, generally speaking, retail price, right? That's kind of the headline when you drive past the truck stop. But most trucking companies, if they're utilizing a fuel card or being smart about it, they're going to be paying quite a bit less, and that's through negotiated relationships that they have with merchant partners. And the fuel cards facilitate those types of transactions and make sure that the invoicing is correct and the reporting is accurate. And they're able to save quite a bit of money by purchasing, at a much reduced rate, either through a retail minus relationship, but generally speaking, most carriers are in that cost plus realm where they're buying fuel at a discounted rate that's based off rack pricing, throughout the nation.
Aaron, who is buying? If no one's buying fuel at retail, what is the point of the retail price other than to create a DOE index?
Yeah, that's a great question. There obviously is a market in that retail space. I mean, we still run up against entrants into the industry that that are using a credit card to purchase fuel, right? So it's not like there's no one buying. But generally speaking, once you get into the industry and you have an understanding of kind of how the game works and the value of having a fuel card, you immediately work to get that in place so that you can start saving money, for your carrier. It's the second leading charge or expense for fleets outside of personnel. Generally speaking, although, the fuel price surcharge or the fuel price spike that we saw here recently, it might have been the leading expense for a lot of carriers based on, what happened after the unrest that we saw in the Middle East. But yeah, there's always going to be some, element of the market that's going to purchase at a retail or credit price. They like to see the float, right? But it's a dangerous game if you're purchasing fuel with a credit card. We've seen it certainly, but yeah, you would be well served to be able to purchase or to have a fuel card in your pocket to be able to purchase fuel at a discounted rate.
Well, years ago, when I was in the fleet card business, we looked at, it was a bunch of the Nashville country music touring buses actually were using an American Express. I mean, it was insane to me that they were doing this. They had not even considered a fuel card. I mean, look, they're very different than, say, over-the-road transportation where we live and breathe the market. Right. These were tour buses that were bringing around country music stars. For them, getting the show on the road was the important thing, and the cost of fuel was not even really on their radar. But I imagine the education has been a lot more than it used to be because there's been so many new entrants, so much more market data that's available, apps that people can get to find the price of fuel. How is that changing your business?
Yeah, well, that's one of the things that when we're having conversations with prospects and people that are newer to the industry, that we want to help them grow, right? And the way that we can do that is we can put something in their wallet that allows them to extract savings. And not only that, but safety against fraud, which anytime that we see fuel prices spike or go through the roof, fraud follows, right? And there's ways to safeguard against that, and fuel cards can certainly help with that. And then, other areas that we like to focus in on is building that business credit with a company. We were one of the first fuel card providers to report positive payment history. And let's also be honest, if there's negative payment history, we'll just say there's payment history, right? To credit bureaus, right? That allow a fleet that is looking to build its business credit that allows them to grow their company and expand on that model. We're one of the first to explore that avenue for companies to really help them as they got a solid footing. Certainly, the last couple of years with all the new entrants, it was a little bit of the Wild West, as you guys have well documented, and we've seen. With certainly our business, and then now the opposite of that, right, where we are seeing a lot of the compliance and the Montgomery ruling and things along those lines that have kind of taken it the other way. We're just very, very thankful, though, with the capacity shrinking, that the rates appear to be in a position where they're able to survive. At least the companies that are operating in the right way and understand their business. But if they have or looking for insight on how to operate more efficiently as it relates to fuel spend, we're right there for them, right? We have a dedicated account management team. All of our sales reps are well versed on those lines of thought, and we proactively, when we see a company in distress, right, and that there's things that we can pick up on that give us an indicator of that. We give them a call and we try and find out, hey, what's going on, right? What can we do to help? Do you have a factoring partner? Is cash flow a situation that you're struggling with right now? Like, give us some insights as to what you're seeing and have honest conversations with them. And that's gotten really, really important as it relates to the market that we're in right now, as it relates to, the Montgomery ruling and things along those lines, where long customers of ours, and it's not been like dramatic. It's really been a few here and there where we've seen kind of like long-term customers of ours all of a sudden show up in distress, and a lot of that has been driven by some of the things that have happened recently here in the market. And so we just want to make sure, one of our taglines is "You never roll alone," and we take that very, very seriously. And so it's important to us that, whether you're just getting into the industry or you've been a customer of ours for 10 years, that we're paying attention and we lean in and focus on making sure that they're able to operate and continue in a manner that's going to, lead them to success.
Aaron, I got to ask your thoughts on current oil prices, how this impacts over-the-road diesel. I looked just a second ago that WTI is down to, I believe, $74 a barrel. It might be even moving and as we talk. What are your thoughts on sort of the direction of where diesel's headed?
Yeah, I don't think that we're going to be under $4 through the end of the year. I think, which is where we were at prior to the events that spiked in March. I think it's going to be a gradual decline through the remainder of the year. I think our national average yesterday, non-discounted price was at $4.91, and I suspect that will continue to erode through the summer and on into Q4. But I don't anticipate it as you and I have shared previously, Craig, to be a dramatic drop off. It tends to parachute down versus spike rapidly, like when we see fuel prices or the price of oil go through the roof. Now, that being said, anytime something flares up or something reverses course in the Middle East, as we've seen here recently, it's like we've got a deal, we don't have a deal, we've got a deal, and right, it's kind of this back and forth. Anytime that gets fractured or that changes, right, then we will see. We could see that just kind of turn right back around immediately. So I think, if I'm looking at it and from what I've seen, right, it's going to be a gradual decrease to the remainder of the year, but subject to change based on, situations in the Middle East that are out of our control.
Yeah, I mean, we did get specifics finally. Like, there's been a deal tease, but finally, we have specifics as to what that deal looks like, Julie. Fuel is obviously, you worked in a big trucking company. Fuel is a top of mind. Shippers are dealing with navigating fuel and market conditions. It's a lot.
It's a lot, yeah, and I think we can talk a little bit more about the fuel and the impact there when we get into our Sonar update in a minute. But Aaron, thank you for being on. It's been great. I wish we had more time.
Thank you.
Hopefully we will have you back on in the near future. But with that, we are going to get into talking about fuel and some other indicators of what's happening by diving into the Sonar data with Craig's update.
Day, and this is an important day of the week because it means that we've had 24 hours to digest the weekly American Association of Railroad volume data that they put out every single week. One of the reasons I think it's really important is it tells us about the strength of demand that's outside of the trucking nuances. So when we talk about that, we can see trucking volumes, we can see tender rejections, we can get a sense for how the trucking market's doing, and tells us a lot about the economy, particularly the upstream economy, but we don't get a ton of insights on the industrial segment in terms of strength without looking at railroads, because that is the primary mode of traffic for the U.S. industrial segment is through the railroads. Now, I want to take intermodal off the table because really intermodal is a fungible mode of traffic between trucking and intermodal, and some of the intermodal data is being impacted by trucking capacity, by being driver availability. It's a fungible commodity between rail and truck, and therefore shippers will shift their volumes around based on conditions of the trucking market to take advantage of lower pricing and capacity, and I believe we're seeing that in the intermodal data. But I want to get to the bulk data because I think it's probably the most interesting part of the data that we get for the American Association of Railroads. No one has to tell me, and certainly our viewers, that trucking's absolutely on fire. I think the big question is how much of that is demand driven, and to look at the economy, we need to know how the industrials are, because we really went through a couple of years where the industrial segment wasn't doing great, and we're starting to see it come back alive. And the American Association of Rail data, their weekly report, confirms this. It also tells us that things are getting better and stronger, not weaker, despite all the noise that you may hear out in the news and sort of broader economic stuff, concerns about what's happening. We are seeing industrials come back. It's a really strong report. It continues to firm. Things are getting stronger as we move into the year, which I think tells us a lot about what to expect in the second half. It relates to overall freight demand, including trucking, because the nice thing about the rail data is it tells us what's likely to happen a couple months out, because if you're bringing in source material into your manufacturing plants, you're doing that months in advance of when production is. And so when we look at the data, it tells us that factories are going to be doing quite well in the second half. So let's get to the data specifically. So total traffic up 7.2%. That's an amazing number. Railroads just don't grow that fast. That's the thing you should keep in mind, is that unlike technology, I have a lot of broader folks that are not involved in freight that watch this and are like, you get excited about 2% growth. You've got to remember that we're talking about, this is tied to the industrial GDP. 2% is actually a pretty strong number for industrial GDP to grow, at least over the last decade, because of all of these sort of macro factors. When we talk about 7.2% for the railroads, that's a big number. That's a really big number. And in terms of total car loads, we're seeing it, and I want to look at the bulk data specifically. I'll get to intermodal in a second, because total carloads are up 2.8% this week, but actually up 3.2% year over year, week to date. That's really important because it tells us, frankly, that the bulk part of the economy is growing at 3%. That's an exciting number. Again, put it in perspective of broader GDP growth, 3.2% in industrials is actually quite strong, especially when you realize that coal, it continues to be in perpetual decline, and we're not getting a push from housing, which drives things like forest products that also are showing up weak. We've seen some deterioration in the forest products, about 1%. Getting specific commodities that I want to call out: grain exports, wheat, things like barley, those are up a total 15.4%. This is all exports, by the way. Exports are really driving the grain market. And it's interesting because you listen to the news, you hear how farmers are struggling. Soy farmers are struggling because China hasn't been buying any soy up until recently. But grain shipments, wheat is absolutely ripping. These numbers are as high as they've been in, almost 40 years. It's really, really encouraging in terms of just how strong our grain exports are. One of the other data sets that I like in these commodities is stuff that's involved in things like steel making, metallic products, metallic ores and metals, year over year, up 5.7%. When we look at this week, compared to last year, It's up an astounding 19.2%. So we're seeing it strengthen. Things are getting stronger in that part of the economy, and non-metallic minerals is at 4.2% this week and 2%. I want to call out specifically the Coke data. Coke isn't what we're drinking. We're talking specifically about the stuff that goes into furnaces that makes steel. You need a lot of heat to make steel, and that number's up 6.4%. Really, really strong indicator of just steel production, metals production here in the United States. Iron, steel, and scrap is up 5.4% year over year. Just like, this is an amazing report. Now, I want to move on to intermodal because that deserves a conversation in itself. Intermodal this week over last year, the same week, is up 11%. It's firming. What's really interesting about intermodal is just how important intermodal traffic is. And we've talked about in the last, say, 2 weeks, trucking conditions have softened a little bit. Not in a really demonstrative way, but enough to kind of where brokers are getting a little bit better market conditions. Carriers are finding it a little harder to find those big rates that they were enjoying. Again, we're still near all-time highs, but we're not seeing them go up. We're not seeing rates go up. We're not seeing the kinds of activity that you'd want to see firming. Again, we're waiting for it. I think maybe after Friday's holiday, June 19th, then we move into next week, which should take us into the July 4th surge. I think that's when we'll start to see rates pick up. But some of the softness relative to the momentum we had in May very well might be intermodal traffic picking up. A couple of things is shippers prefer intermodal when fuel prices are really high, and it takes them a little bit of time to reshift their supply chains. We're probably seeing intermodal benefit from this. Is we saw high fuel prices back in March. It takes a couple of months realistically for some shippers to shift from truckload to intermodal just because they have to reconfigure the supply chains. So that may be driving it. Combined with trucking capacity being really tight, it's also a factor. Shippers are prioritizing where can I get my capacity. Intermodal provides a really nice outlet for that. Intermodal is at all-time highs in volumes. It's got off to a slightly slower start this year, just because I think a lot of real weakness in the trucking market last year. Probably a lot of shippers were sort of caught off guard by the robustness, plus some of the slower port activity probably drove some reconfiguration in the intermodal market. It's no longer the case. We're seeing it absolutely go, and we're at all-time highs, which I think is really important. Now, I want to get into trucking because everyone's wanting to know what are we seeing in the trucking market. If you're paying attention to the show, I promise I'd go through the map. I'm using a haul map. What's interesting about the haul map is I would say this is a mixed report. Go to the blue markets. Blue, we're seeing stronger blue conditions. So markets that were bluer earlier this week are getting more blue, and markets that were red earlier this week are getting more red. So it seems to be some extreme changes in the market. And again, Hall looks at the inbound versus outbound, the balance of freight out of a market. The stronger that market is, the deeper the blue. The weaker that market is relative, so there's more trucks than there is loads, the deeper red. It's the same thing I've been saying all week. Avoid the West except for California, Southern California specifically. Northern California, not great. Southern California is doing okay. Dallas is better. If you're west of I-35, go take your loads from Northwest Arkansas or Dallas, shift and deadhead your capacity. Southern Alabama, Dothan, doing really strong. Chicago, Metro, strong. That grain belt Midwest is doing well. Again, this map looks very similar to the ones we've done all week, but I do think it's interesting how we're seeing, I call it more extreme levels of conditions. If things were red, soft red, they're deeper red. If things were blue, we're seeing deeper blues. I think that tells us a lot of the reason we're getting mixed sort of data is that brokers are finding real opportunities in those softer markets to get higher rates and are having to pay out more in those really strong markets. If you go to the blue markets, you're much better because you'll get more volume, you're likely to get loaded pretty quickly, and your chances of getting a much higher rate substantially increase. So you can get this information. We have it on the Blue to Blue app inside the iOS store. That's where I would go if you're a driver trying to figure out where do I go. The Blue to Blue app can tell you that.
All right, so great update, lots of good stuff in there, but I want to go back a little bit to talking about fuel, as we were talking about right before the market update, and if that is going to provide rate relief if the price of fuel goes down. So I had some meetings with shippers yesterday, lots of good outcomes, but first thing to talk about there was they were hoping that if fuel, diesel prices, we saw some relief, that then their rates and some of the pressure would go down from carriers. I wholeheartly disagree that will happen. It's supply and demand and market driven, not cost driven in irregular route one-way trucking. And then the flip side of that I reminded them of that they certainly did not want to hear is that if the price of fuel goes down and the price of gas goes down, consumer sentiment is likely going to continue to rise, hopefully is going to continue to get more positive, which means people are going to buy more, which is going to create more demand, which is another reason why the rates are not going to go down.
Well, I think, look, you've seen fuel prices on wholesale are off more than $1 a gallon just in the past 3 weeks. Oil does drive the price of diesel. It does show up in there. It's not the only component that drives it, but it is a big piece of it. And we've seen retail diesel also drop by as much as 50 cents a gallon. And, spot rates are near all-time highs. I think 363 on the daily. Yep. I think on the 7-day, it's around that same level. And while we're talking about softness, we're only talking softness in momentum, not softness in rate. 363, if I had told you that 3 months ago, I remember when I did the bet, and of course this is a bet where I said if spot rates don't end up hitting an all-time record, I think it was around 360 or something, that I was going to go to Turkey and I was going to put a full head of hair on. The nice bowl cut, that's what I threatened because I was so confident. My wife probably would have divorced. It would have been a very expensive head of hair. My wife, it was sort of that Amish bowl haircut, Anyways, I didn't have to do that because spot rates did hit all-time highs, and that is we are at those levels despite the fact that fuel has come down. And so there isn't going to be relief. What you will see relief in is fuel surcharges. Yes. Shippers will find fuel surcharge relief, and I think that will show up in the data, but there is no reason to believe that spot rates or contract rates are going to come down with cheaper fuel prices.
Same.
It improves the cash flow of the carrier, but it doesn't change anything about the clearing price is the clearing price. Ultimately, when we talk gross rate, that is what it takes to buy a truck. And when you're talking about all-in rates, it's, diesel is sort of it is a cost input to the carriers, but it's not something that shippers are picking up on those all-in rates or brokers picking up.
Fuel going down is not going to fix routing guides. It's not going to create more tender acceptance.
Julie, we're going to talk next week. I want to talk next week about the change. You had a very interesting observation that shippers has been a whole new group of shippers that haven't seen markets like this. We got to get into that, but we got to go to break. The production team is telling us it's time to get to a break. Coming up next, we have Charley Dehoney. We have Dan Heinen from Kleinschmidt. We're going to talk about what their big announcement is. Stay tuned.
Huge thanks to today's OTR sponsor, again, OTR Solutions. They believe the right partner should know your business, understand your goals, and be there when it really matters. It's no accident that OTR boasts 4.7 stars on Google. They know that excellent customer support is at the center of every relationship. With responsive teams, industry knowledge, and a commitment to long-term growth, OTR gives customers more than service. It gives them a partner designed to help their business succeed. Learn more again with OTR.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
Second group of guests here have flown in to tell us about a big announcement. I'm here with Charley Dehoney, the founder and CEO of Upwell, and Dan Heinen, the CEO and president of Kleinschmidt. Guys, you're in, you've got a big announcement. Before we get into it, I want, Charley, for you to describe what Upwell is, what you guys do, and then we're going to talk a little bit about Kleinschmidt, and then we'll talk exactly what this big announcement you guys have.
Thanks, Craig. So Upwell is a platform that helps trucking companies and freight brokers get paid faster. And we use AI to automate the upfront pre-invoice audit and then the generation of the invoice to make sure that the invoice is accurate, thorough, and complete before you send it along to the shipper portal.
So talking about just helping companies get paid?
Yeah, absolutely.
And that's what this is all about. Now, your customers are carriers and brokers.
That's right.
A little different than the freight bill and audit, where shippers are sort of the carrier customer. Why is that important for you guys?
Well, as a recovering freight broker myself, having spent decades in the space, I saw a big shift about a decade ago where all of the shippers started partnering with these audit companies, and it could be a large bank, it could be just a freight bill audit company, it could be a transportation management provider like a DHL that is handling the settlement of the invoices alongside the execution of the transportation. But all of those different functions had their own workflows and their own portals to log into. And so as the complexities on the shipper side or the payer side got higher and they started using technology to audit their invoices, I saw that there was a missing link over on the pre-invoice audit side where the carriers and brokers were missing the tools and the integration points to exercise those audit workflows before they got over to the freight bill audit company.
Now, how long has the business been around?
So we started the company about 2.5 years ago.
And you were like, you've been in the startup community, you're sort of an OG in the freight tech. You wrote a blog post years ago, I think it was 2017, of sort of following the global trans mafia. But right. You've kind of been an institution in this industry. You were at ZBox, which is an incubator that is funded by one of the largest transportation companies in the world.
That's right.
And you ran their incubation strategy. Now you're a founder, but this is not your first business you founded. Why did you decide to go after this problem?
So I wanted to start a software company in transportation for many years. When I left my first role out of college, Worldwide Express, I wanted to build another TMS. And this was in 2007, 2008, when the world didn't need another TMS. Mercury Gate and others were doing a great job. And so I really took a long time to pick the problem that I wanted to solve. And it was while I was running the accelerator, and I wasn't just working with CMA CGM Group and their freight forwarding business, SEVA. I was also working with their largest trade partners, BNSF, the railroad, Road One, the trucking company, Ingram, the barge company, and they all had the same problems. That shippers' unique requirements on their billing standards were driving inefficiencies and headcount in the back office of these logistics companies. So it was really a couple of triggering events. I saw that Gartner had just named accounts receivable automation or order to cash its own category. So that in 2022, that space was really opening up. And I thought if that's going on in other industries, certainly somebody's going to come into transportation and logistics and clean up that process. And then I also saw that ChatGPT came out, and became commercially available in October of 22. And that was really the aha moment that led me to believe I need to leave this comfortable job working for this amazing company, and I need to get back out in the arena and build this, because if I didn't, somebody else was going to, and that was going to eat at me forever.
Yeah, I mean, it's when you get back in the arena and you got to be a founder, it's a lot different than sort of sitting on the sidelines. Welcome back.
Thank you.
We're going to get to what you've learned and what you've experienced here in a second. Dan, those that don't know Kleinschmidt, how would you describe Kleinschmidt?
We started 40 years ago. This is our 40-year anniversary, by the way. We're very proud of that. As a EDI integration company in a lot of different verticals. People think of us mostly in the transportation space. We're still in that mode. That's what we do. But in the last 6, 9, 12 months, we've been really looking at, okay, what can Kleinschmidt do to help our customer base? Because just transforming data is not going to be really in vogue anymore. It's still a very big part of what we do. But how can we use that data, those connections, all of that to help our customer base? So we do about 55,000 tenders per day. About 70% of those are for carriers. So that means we do about 35,000 per day, which does mean we do about 35,000 invoices per day. And so Charlie and I met each other at a show, and he explained his vision, what he was looking for, and that fit exactly where I think Kleinschmidt needs to go and where we're going to go. How do we help our carriers by using the data that's flowing through our network? How do we help them derive value from that? So if we can take the data that's already flowing through the network, siphon it off into Charlie's world so that he can help Kleinschmidt customers get paid faster, that's a good thing for everybody. And it helps us in the future for some of the other things that we're going to be looking at doing as well. So we're very happy to have this relationship with.
So what is the relationship between the two guys? Is it a partnership? Is it a joint venture? Is it an investment? Like what is the actual relationship?
Kleinschmidt made an investment in Upwell. So, and we're very happy to do that. Charlie made it easy for us. His team was fantastic. We worked hard towards that. So just with the investment also then just means the partnership. And so we're working hard together to improve the space for the carriers so that they can get paid sooner. Our vision is exactly in line. Like I said before, when I met Charlie, I was like, wow, we're thinking the same exact thing. He's a piece of what I would really like to get into, and it just fit perfectly, no doubt about that.
What is that exactly? When you talk about vision,
well, again, as I said before, we have all of this data going through our network. So at any given time, this is be a little preemptive for me, but at any given time, we know where about 35,000 trucks are going on any given day. If you take that over a couple-day trip, we know where 70,000, 90,000, 100,000 trucks are going. How about we take that data, we create a capacity marketplace where brokers, shippers can come into the Kleinschmidt network and see where these trucks are going to be unloading, not just see where they're going, but when they're going to be there, sometimes even before they've left their origin point. So now we can predictively tell brokers, shippers, where trucks are going to be so that the capacity is there when they answer they get the tenders or whatever the case may be. We can help them find and cover loads. And then we can help our carriers, which is what I'm most excited about, more backhauls. Help them be more productive and more efficient in the way that they find backhaul data.
So getting into the marketplace business or matching, we'll call it load matching.
Load matching, yep.
And load boards have been around. Craigslist, obviously DAT and Sonar compete. But there's been a lot of noise about the fraud that takes place on these marketplaces. Mm-hmm. What is it about your product that you guys are offering that's different than, say, just a standard load board?
I don't think it's a load board. I don't consider this to be a load board at all. I think load boards are where you go to post freight to find, and truckers find you. This is where the brokers can find the carriers. So I think this is before the load board.
Like a capacity board,
it's a capacity
identifying
board.
where trucks are at.
Certainly is a capacity board. So we're going to just enable and have our carriers be able to be seen in the space. And so now we can not only Kleinschmidt via the data, nothing changes for our carriers, nothing at all. Today, your business looks, from Kleinschmidt's perspective, looks exactly the same as it did yesterday. The only difference is that we can use that data to help you derive more revenue from the data that flows through Kleinschmidt. And then Charlie's another piece of that. So now we can help you load match, and then we can help you get paid faster as well.
Dan, is this marketplace live? Is it?
We are starting a beta in 2 weeks.
Got it. And who are the initial beta partners?
Well, we're still working through that, but as soon as they come out, we'll certainly say that. We have about eight brokers and 8 carriers lined up to just do a quick beta. We just want to check, make sure everything's in place, but the software's been built and we're ready to launch it.
And I imagine, because you guys are involved in this, these are larger carriers that can handle electronic transactions. They're not the spot carriers taking freight off the load boards, or how are you?
Well, we've gone through a bit of a change at Kleinschmidt. We purchased 2 companies in the last year and a half. One of them is a document conversion software company that can take PDF documents and turn them into digital transactions. So our goal is, even with the smaller people and even with the people who are currently sending EDI through the network, they're still processing paper. Can we get them to digitize that data and get it in the network? So if you've got 200 trucks, but only 75, 125 are moving via EDI relationships, how do we get those other 75 into the network? We do it via the DCS options that we now have available. So let's digitize the paper. Let's get in the network. Let's expose all of your trucks into the space, right? And so, that's one of the pieces that we're adding as well. And we're looking forward to seeing where this goes, no doubt.
Charlie, why Kleinschmidt? Of all the companies that you could have partnered with taking investment from, when you take investment from strategic partners, there's always, this because you worked with a lot of early stage startups, there's always a sort of balance of trying to look after your own interest as an independent company and then your partner's interest, and they sort of the goal of working together. Why did you decide that Kleinschmidt was the right partner for you?
So there's a multifaceted answer to this, but the short answer is, going into building the business, we looked at the opportunity to create an infrastructure play whereby if we were successful in our job, we could be the global clearinghouse for logistics and supply chain payments, from origin to destination, international, domestic, doesn't matter. In order to do that, you have to establish a high amount of trust. And there's a very short list of folks in this space that we look at as infrastructure players that have garnered that level of trust that can really help us accelerate our journey on building the trust inside of the network and inside of the industry. And so Kleinschmidt, along with some of the other more prominent banks, are those type of infrastructure players that we'd like to align ourselves with. From a data integrity and just a quality of business perspective, it's just a great name to have alongside. Mm-hmm. Secondly, when you look at the risk that comes along with taking strategic capital, it generally comes with scope creep or roadmap imposition, where the strategic has an ulterior motive on what they're looking to do. Our relationship is actually very, as an equity partner, Dan and Dave and team sit on the cap table alongside, a number of others, but we have a distribution relationship in place whereby I don't owe them any cut of the revenue. They're incentivized in making customer referrals. And so as we were sitting here today, we just had an email blast go out to the first 60 carriers offering Upwell as part of their solution in the Kleinschmidt network. And so we don't have to build any new software. We don't have to make anything different. We've already piloted this product with a couple of Omaha-based carriers where they were uploading documents into CAS, and we were doing the automated upload through our agent. And then we started bringing in the 210s, the 204s. We started to authenticate the data before we passed those on to CAS. We saw a dramatic decline in rejections and exceptions in the CAS portal. And then we knew that what we had was really, really powerful. So without going back to the drawing board and rethinking our business, we're able to bring in a really powerful partner who's already selling to the companies that we want to be working with. Because we work from brokers that are the smallest of the small up to your Werners and Arrives and large companies like that and megacorp. So our core business right now is where we're growing the fastest is in the larger enterprise side of these carriers that see our solution and they want to come in and partner with us a la carte on these workflows. And then also in like what I call the upper mid-market carrier, the company that is on McLeod, they're on Trimble, maybe they've got a homegrown platform, but they've got a brokerage, a carrier business, maybe a managed trans business, and all of those layers require make complexity in the billing process. And that's where we're really winning. And so since Dan and his team have been selling to those companies for years and already have the distribution relationship, it just made all the sense in the world.
So you guys on the other side, so CAS obviously is one of the largest payment bill and audit companies, also a bank. You're on the other side of that.
That's right.
Is it competition? Is it co-opetition? Is it just partnership? How do you guys view that?
No, actually, those the big auditors really love what we do because we're looking at two sides of the same invoice. The largest sort of challenge in the freight audit and paid business is bad carrier data leading to missing or incomplete information on an invoice. And so where we sit between that payer, which could be a direct payer that somebody's, big shippers doing self-pay, or it could be an audit company, is we have a context layer, a shipper rules engine with these 200,000 shippers that we've already invoiced, and we know exactly those standards and requirements of those shippers. So when we take in a document from Werner and it's supposed to go into CAS, well, inside of Werner's TMS mastery, there's a whole bunch of data on that load that might not have made it to a certain document. And CAS is looking for that one object, their sort key, that is going to be required to audit and approve that invoice on their side. If they don't have the right sort key, but we can see it in the TMS, we can propose a fuzzy match, do that automated change, and resubmit it to CAS without a human getting back involved. So CAS has a lower cost to serve by, call it like $1.90 or $2, by not having a human in the loop on an invoice that we can get pre-approved.
And they really represent the shipper at the end of the day. You guys are representing the carrier and the broker, the providers. Bringing it together is just all about creating electronic transactions, using AI to help do these things. Charley, there's so many companies that have jumped in the payments business over the last couple of years. In fact, I've invested in about 30, these are small checks, I want to be very clear, about 30 different companies. It's interesting, many of those companies were not in payments, and all of a sudden they sort of pivoted to payments over time. Wasn't my intention to make those investments in a payments company. I spent 10 years in payments. It's a very difficult business. But we solved the transactions where DAT bought Outgo, which is a payments business. Triumph has built their payment network. Is that a competitive layer for you guys? It certainly feels that you're, as you continue to make investments towards that payment flow, that is, and adding the marketplace element, that is moving into area that you are going to see more competitive friction.
Yeah, I think where I really like our positioning is as the infrastructure player that's creating the pipes and the plumbing and the automated workflows to turbocharge the tools that the broker and the carrier is already using. So we talk to the ERP, we talk to the TMS, we talk to the Freight Audit and Pay portals. It puts us in this unique position of Switzerland today. We don't facilitate the payment of the outbound payment to the downline carriers. That's obviously an opportunity that comes up and gets discussed in our business quite a bit. Right now, we're maniacally focused on the accounts receivable automation space. We don't see a whole bunch of other people in there digging into these workflows to help the brokers and the truckers get connected with the shippers and get a more efficient payment relationship. So while there's a lot of different ways to move the money, and there's a lot of folks that have come out and tried to build new rails, we're really comfortable right where we're at right now, which is just helping brokers and carriers do more with less, help them get paid faster. We've got a lot of data that we can go back to them with in a very short period of time to show them why they would not want to add more elements of their back office into the Upwell platform. So that's really where we're going to stay focused, is just be the automation layer. And payments will be a watershed moment in our business. There's no doubt when we unlock payments, it's going to be a big moneymaker. But for now, our true north is the number of invoices and the dollar amount processed per month or per quarter by the Upwell network.
There's so many investments going on. It's interesting that having ran a payments business and a freight logistics data business, this sort of intersection feels inevitable.
Right.
When you have that much capital going into fintech, when you have that much, these startups like yourself that are really trying to attack this problem, what is holding the industry back from clean payments and clean invoicing? Like, why is it so hard?
So the complexities really comes around, when I was at the steamship line and I saw that they had, 50 billers in the back office with a whole bunch of unpaid invoices, I thought to myself, I know exactly why Bill Trust and High Radius and VersaPay can't do this. It's because the documents and the dependencies on the line item surcharges that come up on a variable basis on the transaction. So a liftgate gets added, then that's a whole different workflow that takes you out of your normal billing cycle, and it requires a different set of documentation. And some shippers require it and some shippers don't. I'm keeping that contextual knowledge and the tribal knowledge that, Peggy and Janet and Joyce and Kathy and all these folks have had in their head in the back office over the years. Getting that into a context layer and putting it into a single platform allows all these stakeholders in the process to access that set of rules. So, where the convergence of the data and the intelligence and the payments is happening, you mentioned Outgo and DAT, there's also Denim and Truck Stop, Mudflap just bought Parade.
Yeah.
So you see it, it's happening. And so, what we're talking about doing together is natural. And there's other marketplaces that we've already talked about today that we're deep in conversations with, because this concept of taking a paper document and turning it into an EDI invoice that meets the standards of the biggest shippers, that unlocks opportunities for the smallest and small carriers. Mm-hmm. And we're really excited about bringing that down market eventually, but right now the big boys are the ones lining up and taking our calls and wanting to automate this part.
Highway's got TFX and they have their marketplace. It's such an interesting time. I have been asked ever since we rolled out our data, everyone assumed we were going to enter the marketplace business because we compete against DAT, and it felt natural for people to make those assumptions. Mm-hmm. I never wanted to enter that business. That's a brutal business, going up against these things. Dan, now, in fairness, you guys have massive distribution. You've been around this industry for as long as any company has been, if not longer than most. You guys are in a great position. Why do you think you can win? What gives you the confidence that you guys are going to really bring solutions that
capacity. I mean, we must be I think we're one of the largest processing of EDI data in the space. So as I said before, we do 50, 55, 60,000 tenders per day. So we already have the capacity, and it's already data that's flowing through our network. So my ROI is basically 100%. I don't really have to go out and search for data. I have it coming in right now. The question is, can we entice? I'm really excited about this solution here because can we entice those unknown carriers who aren't in the space doing any electronic data? Can we entice them with freight matching and with getting paid faster? And can we do that then even without saying, hey, you don't have to do EDI, we'll just digitize the paper that you have today. So how many of those smaller carriers can we get on the network to increase the capacity within our space? That's what we're looking for as well. So those are the conversations that Charley and I have had numerous times now in the last 6, 8, 10 weeks. So we're really excited about helping our customer base. So this is all about Kleinschmidt helping carriers be more profitable. And that's really that's the goal. That is my singular goal in this, and having brokers be able to find them and cover more loads. But that's a side piece. I'm more interested in getting the carriers paid faster, more profitable, and all of those types of things. So there are other tools that we can add in the future as well as toll processing or gas fuel pricing. So let's build a carrier-centric network that helps carriers become more profitable and more easier for them to find backhaul loads.
You come to the right place to pitch and tell your message to small carriers. We have a couple 100,000 people that watch this show, which we've been really proud of what we've done over the last couple weeks. This is also transmitted on Road Dog Network every day. Mm-hmm. For those small carriers that are like, how do I join this network? How do I participate, Dan? What is the message? What is the best process for them to go through that?
Well, you come to our website. We'll have a landing page there where you'll be able to click on so that you can express interest and we can have a conversation with you about what it takes. Again, we know small carriers. We have a couple of ways that we can do it. We have a product called Freight Launch, which isn't a TMS. It's just an enabler for this electronic data. It'll accept a 204 and allow you to push a button, create an invoice that we can then send off to Upwell. So it's a matter of us just digitizing that, getting it into a position where they can participate in the network very easily at no cost, literally no cost, so that we can get capacity in the network so the brokers can find you. That's the goal. So if you want your trucks to be found, if you want that capacity to be part of the network, give us a call and we can just very easily get you involved in the network, and then you can get paid faster, and then there are other tools that we can add in the future as well. So that's what we're excited about, and that's really where we're going with this.
That's great. Charley, I got it. Since you're in studio, my production team's going to get frustrated with me. They really want to run these ads, but I'm not going to let them. We're not going to go just yet because I got you in studio, so I need to ask. I want to go back to your journey over the last decade. When you wrote this piece, and I wish I had it, I didn't think about it until we're sitting down, about sort of the market, the founders that have really impacted it. It was 10 years ago when you wrote that. You actually talked about the global trans mafia, which is now the worldwide, which is actually now ShipStation mafia. What does that map look like today? Like who are the people that are on that? Where have the successes been? We've spent an enormous amount of venture capital here. Yeah. What does that world look like today? Sort of bring us up to date.
Well, look, I think there's, when you add the worldwide context layer in there, it starts to become a pretty big universe. And it used to be, like C.H. Robinson was where all roads led back to, and then as brokerages evolved, companies like, my former company, Worldwide Express, has really put their thumbprint on the industry. But I would say that the time that I spent, a very short period of time building an agency inside of the Global Trans Network, that was the most formative time, not only in my career, but also with what was going on inside of freight and logistics from a technology perspective. Venture capital had just started waking up after the great economic downturn. Early 2010, you started seeing companies start to raise money and build. And having come out of Global Trans, you saw, obviously Jet McCandless and Andrew Leto would be kind of, the cornerstones on the Mount Rushmore of the Global Trans Mafia. But then you've got the My Carrier guys, Michael Bookout, that's done a really good job with them. And Dan Bebout built Convey and very quickly sold that to Project 44, and it became a big part of their platform. And the list goes on and on. I think there's some guys that have really built big talent businesses inside of the industry. KJ McMasters, who I was with in Colorado a couple of weeks ago, Brent Orsuga, both those are the guys that sold me my global trans agency when I first joined. And Jet onboarded me and really helped me kind of get established. And Michael and Andrew Leto in those days were just like, Michael was the hard charging sales guy, Andrew was the mad scientist, and they're still, crushing it over at Emerge. So it's fun to watch these guys. Andrew's now on his third act after Global Trans went to 10-4 and then, did Emerge.
Sure, Travis Ryan would like to be included.
That's right. I always forget about Travis because he was like the tech guy, he was Andrew's just like.
He is the godfather of visibility. I mean, 10-4 was a precursor 100%. To a lot of the visibility companies, and it's interesting to see how that whole visibility game has evolved. They also have entered in doing other things. Project 44, Jet has built some automated agents to help shippers do it. It's a really interesting time. What sort of bring us up to date? If you were to write that article today, what would that article talk about, the different buckets and impact?
Well, I think, you would talk about kind of brokerage 2.0, digital freight matching, what Emerge has tried to do. You would talk about visibility. When Jet started Project 44, it was like an LTL API kind of.
It was like a load quoting system was the original,
yeah.
and then he entered into your market, Dan, a little bit with visibility and tendering and APIs. Mm-hmm. So that's.
And I think when he got into visibility, it was because everybody always had the question, "Where's my freight?"
Yeah.
And I think what you're seeing now in kind of logistics tech 3.0 is there's a lot of people that are taking solutions like I look at what we're doing on the freight audit and pay automation and visibility side is very much like what Jet did over a decade ago and answering the question, where's my freight? And we're answering the question, when do I get paid next by my biggest customer? Right. So I think taking the same playbooks that worked in visibility, our entire go-to-market motion has been a copycat of what I saw Jet do and Prasad do in visibility, or what Green Screens did in pricing, where you go partner with the TMS, you solve a problem that they don't solve, you get the TMS to evangelize your product, and then next thing you know, your next TMS client comes from the TMS itself. So a lot of this, I think, is a lot of what guys are doing now is running the same playbook, executing against some of these guys that, like you, that have kind of run before we did.
Mm-hmm. So I got to ask before we go, what is hot, what's legitimate, and what's not? You've seen the insides of companies. What do you think is all hype, and what do you think is legit? And you can't say Upwell.
No.
And you can't say Kleinschmidt.
Yeah, I think.
You can say it, but it's not. We're going to discount whatever you say.
Yeah. What's hot right now is vibe coding is what we were calling this 6 months ago. You can't even use that term anymore because it's real coding. And so what is hot is the build, buy, partner equation. When I started Upwell, I knew that was going to be a part of it. I didn't envision that freight brokers sitting at home were going to use Claude to integrate their TMS to their email application and start to build little pieces and bits and parts of these software solutions that they're paying for today. So, in the last 6 months, we've had 3 customers tell us, hey, we loved what you guys did, and we figured out how to build just enough of it on our own. And so I think that's a really interesting trend to think about. And as we start to think about the future of our product, we think about how do we provide those enablers so the curious people can go out there and they can, build their own workflows and become more agentic inside of the Upwell platform without having to go back and look for the other solutions. But in my mind, the build by partner equation, that's hot right now.
Totally changed. And what's fake? Like, what do you think the most overhyped? I'd love to hear Dan's thought on that as well.
I think the term agents has been overused. I think we have avoided talking about our platform like that for a long time because we looked at it as like we had a lot of little automations going, and it wasn't really until the last, I would say, 6 months that we've started to reach a place where we look at our integrations as being sort of governing, and they can kind of work in the background on their own. So I think a lot of the companies that have come out in the last year or two that promote themselves as being holistically agentic AI, I think that's really tough for me to believe because I know how long it's taken us to get to a place where we can operate that way.
Yeah, fair enough. Dan?
Well, in our space, again, we're primarily still an integration company, and the fake part really is the fact that everybody thinks AI is just going to plug in and all of a sudden the whole world's going to connect, and that's really just not going to happen. There's way too much infrastructure out there and way too many different methods of sending and receiving data, and it's still going to require work. And so for the first, I don't see any change in the way that Kleinschmidt's doing our business, our core business. I think it remains the same. And I think eventually these things may iron themselves out, but what we've seen with the advent of all these APIs is just more of a mess than we've ever had before, because everybody's building their own stacks, and all of these connections are less able to be copied because they're all so different. And so API integrations for us can be more difficult. In fact, a lot of times they are more difficult than what we call a simple EDI one. But that's our core business, and that's really how is it going to affect what we do on a daily basis? And we'll see where that goes. But I think there's a lot of hype in there still. Yeah.
Well, thanks guys for coming in. We got to continue this conversation. You come back for F3 in Chattanooga?
Of course.
In October, we should do it again. I think it would be great to see. And I want to get a little bit more provocative, Dan. I know you've got opinions on a lot of this technology. We're going to dive into that at F3. We'll have it again. Charley Dehoney with Upwell, Dan Heinen with Kleinschmidt. You can reach out to find out about the market matching business at Kleinschmidt, and then Upwell. You guys are open for business if folks are looking for getting paid faster. One of the most important things, somebody asked me this, like, why is it so hard to pay or collect money? Like, that's the important thing. We do all this work. It's just, this is a very difficult business. We'll be right back with messages. We're going on to Freightonomics right after these messages.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
Welcome back to FreightWaves Today. We're not going to have a show tomorrow, so I'm going to make sure that we talk about the things that are important. Julie, before we go, there's been a big conversation internally. You yesterday had the opportunity to visit with a couple dozen of our major clients. One of the things that you brought up earlier internal was the fact that shippers are underprepared for this market. Many of the shipper audiences have not seen a cycle where carriers have the advantage. They've not seen, we have the combination of fuel prices going absolutely hyperbolic and contract and spot. What is your sort of general sense of that?
And international disruptions, and they're trying to deal with all of those at the same time. And Zach and I have actually talked about it in the past, even before I had this meeting yesterday, and how we can better serve our clients is that many of them have, maybe their executives have been through a cycle like this before, but they don't have a very tenured staff. So their staff maybe has never been in a market where it was actually very hard to procure trucks. So they're really having to retrain them on that, right? They've only worked in the last 3 years in this down market, or they came from procurement with no transportation experience, and they're really having to get a very quick education on what's happening in the market and why and how to deal with that. And then I think, some of the shippers who I spoke with took it even further yesterday, saying that not only am I, training my staff, because I've been through this, but they may not have, I feel like our brokers can and need to do the same thing, because carrier reps are usually not lifers, right? They do that job for a few years, and many of them have only been covering freight in an environment where it was hard to get freight, but it wasn't hard to cover it. And now you can't post and pray. You have to really build those relationships and make outbound phone calls. Even setting the regulation aside, that also doesn't allow you to post and pray, but the market as well. So they were saying they were feeling that from their brokers, and they were feeling that from their own staff. So hopefully Sonar Data can help in the context we do prepare them with some education for that crew. But yeah, they're up against an uphill battle for sure.
It's a very different market, Zach. Like just the changes and the complexities of the market. We are hearing that our channel checks say that are telling us that there's less freight being posted openly in open marketplaces and the load boards. A lot of that was sort of security driven. Now it's compliance driven. That's the highest risk carrier, the one you don't know that you haven't worked with. How are you helping? What are you telling shippers that they should be thinking about and preparing for?
Yeah, I think everything that Julie said is accurate in the sense that we are dealing with an environment that these guys have really not been preparing for. They've been dealing with global geopolitical issues for the last couple of years, and transportation is kind of like not top of mind. So a lot of what I've been trying to help these guys understand is that these things happen. You cannot just rely on what you did for the last 2 years, and transportation costs have been beat down because a lot of their CFOs who don't necessarily understand the transportation dynamics have really been saying, well, save money somewhere, and they can't save it in the upstream of supply chains. It's been on the downstream side with domestic transportation. So, and that's no longer an option.
Yeah, they had the benefit, inflation became the hot topic a couple of years ago, driving down expense, as you mentioned, commodities, particularly if it's raw materials. There's just an expense they're going to have to eat. They have tariffs for retailers, having to pay import tariffs. That, has somewhat, changed. It's an ever-changing topic. But the reality is a lot of those costs, as you mentioned, have been sort of price takers. There's been the market dynamic where they could effectively continue to benefit from significant price reductions or cost reductions because rates, the rate environment allowed it, the freight recession allowed it. But things have come fast and furious. And, one of the things, we go back to where we were a couple months ago, some of the conversation among shippers was this was just weather or this was a temporary phenomenon. The disbelief was not there. I didn't get the sense that a lot of shippers were taking this as personal or as serious as perhaps they should have.
I still don't think some of them are.
What do you say that?
I still think that, we talked about this yesterday, that there's still a little bit of denial about, this is short term. There hasn't been.
What would be the short term? Like, why would it be short term?
They feel like, I in no way think it is short term nor agree with it, but they feel like because there hasn't been a massive surge in demand, they're not seeing the uptick in their business, it's a lack of supply. They're still wrapping their head around the fact that this isn't seasonal, this isn't short term, barriers to entry are higher, there's not going to be more capacity coming into the market. They're waiting for demand to turn to think that this market has changed, and it's just not the case in this cycle.
And it's unlikely to shift. I mean, I would say, and I've said it, my view is that it's unlikely to shift. Where's the capacity going to come from?
Because it's a primarily capacity side of it. It's always supply and demand, but I think I wrote that article several years ago about how the market shifts slower on the supply side. up or down. There's like a max 1% growth rate or decline over the course of these months. And I think now with broker liability and all that kind of stuff, it's actually slowed that pace down potentially. And one of the things we were talking with Ben Peterson about, who just wrote this blog, our shipper expert, basically, one of the things that he's had to say, and he came from the shipping community.
They were for some big CPG companies and big retailers.
Very big. And he said that one of the ways he's been able to get through to some of his previous colleagues is saying, look, our carrier's knocking down your inbox in LinkedIn. And he actually wrote a blog about it. He's like, ask that question. How much have they been reaching out to you lately? And he's like, you know what? I've only gotten one.
Their phones are not ringing.
No.
Brokers may be reaching out, but the asset carriers are not.
Yeah.
I mean, I've heard stories of carriers are wanting, 5% rate increase, and the shipper says no. The next, they call back a couple weeks later, and those
Now it's
it's now 8%.
Right.
And they're like, great. It is interesting. Let's bring Mike Baudendistel in here. I got to ask Mike. I noticed this morning that intermodal, we had the rail report yesterday, intermodal is up significantly. We've seen it firm. I imagine that intermodal has something to do with this relief valve for shippers. Obviously, it takes a little bit of time for shippers to shift from truckload to intermodal. But is that what is driving the market? Is it fuel prices or is it actually demand?
I think it's a combination of things. I think that the service on intermodal has been very strong. So I think that's certainly part of it. I think also part of it is just the availability of capacity, which really in intermodal, in domestic intermodal, so it's domestic intermodal containers, those 53-foot containers. There's plenty of those. And, the recent, earnings calls, JB Hunt, Hub Group, Schneider have all said that they could handle 15 or 20% additional volume with their current fleet of containers. So they're putting those to more productive use. And then I also think shippers are looking for a way to hedge against truckload capacity shortage. And one way to do that in these long haul lanes that are anchored by big cities is rail intermodal.
So Mike, Zach talked about the fact that many shippers aren't taking it as serious. Julie talked about the fact that she's also hearing the same. What are you seeing are we seeing an environment now where intermodal is going to be the biggest winner in this market? Like, what is your sort of sense of the way things sort of stand?
Yeah, certainly intermodal has a lot of momentum. You're seeing volumes in the first half of the year that you would normally never see outside of traditional peak season in October, November. So it does seem like intermodal is doing very well on the volume side, doing very well on the service side. And the fuel prices, I think, have helped too. Now, even with the fuel coming down and the oil prices coming down, it tends to be when shipper tries out intermodal, they tend to stick with it. There you see the fuel prices coming down. So, I don't think the fuel prices coming back down is going to deter people very much from using rail intermodal. I think since the service levels have been strong, those that have shifted to intermodal are going to stick with it.
I think you're right. They've already changed their scheduling to allow for the extra day or whatever might happen in transit. Yeah. So if they've been able to work that out, no reason to go back if they can see cost savings and decent service numbers.
One of the things I noticed this morning, I was looking at the data, was that it was sort of a slower start to intermodal this year. And I wonder, was the soft truck conditions last year, did that encourage shippers to sort of take advantage of it, Mike? And maybe they were a little later to sort of shift to intermodal, and that's why we're seeing it sort of catch up now? If you go back four months ago, intermodal was kind of a quieter part of the market.
Yeah, that's true. It seemed like January and February, it was a little bit quieter. And then all of a sudden in March, it kind of turned the corner. A lot of those carriers saw a surge in volume right at the end of the first quarter. And that strength has persisted throughout the second quarter. So, yeah, I think you might be onto something there. I think it also just became more apparent that the truckload market was going to be tight, towards the end of the first quarter versus the very beginning of the year.
All right, so we're going to move to, you've got Mike here for a few minutes for Freightonomics, sort of an abbreviated show because of our in-studio guests. But I got to ask each of you, and I'd like to get Mike's take on this as well. Let's pull up that screen. I want to ask Mike, as well as Zach and Julie, what is your advice to shippers? And what is your prognosis on how long this market cycle goes?
I think as a shipper, you've got to go ahead and accept the reality of a high rejection environment that's probably going to be prolonged. Because it is supply side driven primarily. Demand, yes, it's grown, but it's not like the COVID era growth or that 2017 market where we saw those huge spikes in demand. It's going to take time for supply side dynamics to kind of flush through. And using that accepted tender volume index and the same formula.
It's a new index.
It's new, but it's the same premise that I made like in 2022. If you account for the slowness or sluggishness of supply side movement compared to demand, this is going to take at minimum, if demand holds steady and the market were to grow at the same clip, about 10 months.
I think, but what case is the capacity going to come in? It's driver availability.
It's going to be slower.
The immigration, this immigration of any definition, whether you're talking legal or compliant or non-compliant immigration, illegal or non-illegal immigration, that is a problem for the labor supply. It is not just a problem in trucking, it's a problem in agriculture, it's a problem in hospitality, it's a problem in restaurant work, it's a problem with Uber. Drivers, we're all competing. And if we see housing construction come back, data center construction is absolutely pulling labor out of the trucking market. It's pulling labor out of the construction market. It is happening. The question is, if we do see that, where is the supply going to come from of drivers? I don't see it.
No, I mean, I think you're exactly right. The growth rate of supply is going to be constrained by everything you just said. And data centers, they're so inoculated to inflation.
They're price agnostic.
Interest rates, they don't care if they're going to cut or raise rates.
SpaceX's IPO, what is probably, for those that didn't follow that closely, the majority of the TAM was XAI. It was the broken Twitter business that then was X, and then it's this AI company. Like Musk gets a ton of credit. He was actually the original founder of OpenAI, so let's not take anything away from it. But that's where the value was AI. They're all price agnostic. SpaceX is trading at what? Was it 70 times revenue or something absolutely insane? And so they don't have the normal sort of market constraints as you talk about. So they'll pay whatever to build out a data center. They're not going to slow any time down. Capital is flowing freely, as we've seen. You have, they'll pay whatever for labor. They just want to get things going. So I think there's going to be a lot of competition on labor supply.
Yeah, absolutely.
And that is why this cycle is going to continue. What about your thoughts?
If I were a shipper, I would be going to bid as soon as possible and locking in rates in July or August of this year.
You think it's too late?
I mean, if they haven't done it already, it doesn't matter if it's too late. They've got to do it now versus waiting later.
What do they say? The best time to have done an RFP would have been back in January, and the second best time would be today.
But it would still be falling apart, right? I mean, at this point, it moved so quickly.
So what's the point of doing an RFP if you're constantly sort of catching up?
Well, I think this is the time when you are actually being realistic. When you go through the bid, you're realistic about the capacity commitments you give and who your carrier partners are, and if they will actually uphold those capacity commitments at those rates, at realistic rates that are at an increase from your current rate that's going to happen. And I think you very heavily also look at what percentage of your business is transactional versus contract and get as much of it contracted as you can. You might even look at the split of your business of, is there some that could be in a dedicated environment where you know the rates are going to be upheld versus being a regular route one way and spot and seeing where you can make shifts there.
All right, so both of you
and
guys.
regularly talking to those carriers to make sure you are on the same page and that they are feeling the love and knowing that they will get your freight in an up or down environment if they take yours in a...
I just had this epiphany. The two of you both were in pricing. You're in the LTL business, truckload, you're sort of interacting on both sides of it. Let's say that you're running a pricing department today. You're for US Press, you're Express Global, large LTL player. We all know market conditions are tight. We know it's tightening and likely to tighten more. You're seeing in the data. Is it realistic for a large asset carrier to honor the rates that they give out this month, or maybe they gave out 4 months ago? Or are you thinking that pricing departments are going to be just repricing this stuff on a continuous basis?
I think it depends on the size and scope of the carrier. I think it depends on the customer relationship. I think it depends on how old the rates are. If I'm doing them right now, realistically in 3 months, I can't go back to a customer that quickly who you have a long-standing relationship with who gives you a lot of freight. Now, if you're getting transactional freight or you're getting a handful of loads a week, yes.
You're like, no dog.
But if rates are already 6 months, a year, 18 months old, like those rate increases are also going to look significantly different and be higher, right? Than if you if you reprice now, and even if you have to look at it in 6 months, maybe that's 5% versus if you haven't looked at it at all and you're doing 20% down the road, and a carrier would rather do that and a customer would rather do that. Nobody wants to give a 20% rate increase. And can you imagine?
Oh, salespeople hate
I was going to say, poor sales guy going in front of their customer and saying oh, here's
the only time that
price people love it. The sales
people love it because you guys are the nerds. You're sitting back doing the work, and you're being told by your bosses to increase pricing. The poor salespeople, which at times I was.
Oh, but how hard is it to sell right now?
Oh, it's not hard at all. But you have to sell a rate increase. Now, it's one thing to sell, I have trucks. Another big, you have these relationships with your golfing buddies, your drinking buddies, your dinner buddies, whatever you want to call it. Somebody you've had a relationship with. Now you got to tell them, I'm pulling my trucks unless I get 10%.
Transparent conversations backed by data. From external sources and internal.
That's true. That's a great point. That's a great shout out for Sonar, backed by data. If you're using it, Zach, your turn.
Yeah, no, I was a little bit different here in the way that I didn't always take the top end of the market when I was pricing things. I like to see where the customer was in relation to our costs and where we needed to be, because over time, we all know the market's going to go up and down, ebb and flow. Our networks are going to change over time too, based on our need. So I really like pricing based on need in these type of environments, because I didn't want to give a top end rate that I knew was going to get thrown out the window 6 months from now.
What do you mean by need? What do you say need? Was it Express Global?
Traditional trucking, it's funny too, because a lot of these conversations I've had over the years, people don't realize that trucking makes almost nothing operationally. Our ORs were in the mid 90s, which means you're making 5 cents on the dollar to move freight.
Operationally. Yeah. That doesn't even cover your working capital, like the cost of capital. People don't understand. In an environment where interest rates are 6%, 7%, if you're at a 95 OR, you're probably at break even at best.
But think about the mentality that puts you in as a pricing analyst. Like, you are constantly on the defensive. So I'm almost always, even in a market like this, I'm almost always thinking of defending that freight. Now, brokerages...
When you say defending the freight, can you explain what that means?
Defending and keeping that freight. I want to make sure that I have
volume against volume.
Yeah, freight moves freight. The fantastic LTL cliche. But that's where I was most of the time, is like, I didn't get too high on the highs. And I certainly, anybody that came in and, the sales reps would come in when the market was flat to down and beg me to cut my rates. And John Bowes, the president at the time, said, the only reason I'm going to fire you is if you lose me money. So I was always like, I'm not going to cut. And if those customers were on the bottom end of the pricing funnel, and they came during a period like this and a time of a GRI, they're not getting as much of the benefit of the doubt unless they had a lot of...
Because they're refusing, someone, I don't know if it was a show that you and I were on, but I had heard, maybe it was State of Freight, where somebody said that the shipper was wanting them to lower their fuel surcharge. It's like, why would you, first of all, that would be the most insane thing to ask somebody, because fuel is the most variable. But why now? That seems like you've lost all of your leverage.
You have, and again, just like with the LTL market right now, which has got a lot of fuel built into it, most of the carriers know that's going away. I mean, we saw the fuel surcharge chart; it's going down, which means that right now they have time to get some of these rate increases in place and through, which are going to be more sustainable. Now, if you're a shipper and you're trying to play fuel games, if you want a lower fuel surcharge, you're going to pay for it in the base rate. And that's going to be more permanent.
Yep.
Baudendistel, what are railroads doing right now? How are the intermodal and railroads operating? Are they also approaching this? As we've heard through multiple conversations on FreightWaves Today, is that intermodal, the IMCs are the ones that effectively set the price for intermodal freight. How is the rail market playing into this?
They are taking rates up. I think they have more opportunity to do that on the lanes that are competitive with truckload. So a lot of those lanes that are on the eastern part of the country, let's say from Chicago to points eastward, that's where you see the rates rising the most, particularly from, let's say, Chicago to Baltimore or Chicago to Newark, where you're taking containers into places where they're ultimately going to have to be repositioned. And so it does depend on the lane. It's still a competitive marketplace, among the domestic intermodal companies on some of these longer haul lanes, like in LA to Chicago, because, like I said before, there's lots of containers that need to be put to work. And so there's still, competitive pressures between the carriers. I think one of the strategies they're using is to try to improve the balance of the container flows, where they're pricing higher on the head haul lanes. They're either keeping rates the same or even cutting rates on some of the backhaul lanes to try to improve that freight mix. But I think what's different about the intermodal companies is they basically pre-funded the capacity needs by having the containers available and in place. And so that's why they've had more room to accept some of these higher volumes.
Now, one thing that I'd like to understand is what is the percent of intermodal as it relates to the overall truckload market, Mike?
On lanes where it's competitive, something like 7%, 6% to 7.5%. I've seen different things. I mean, that's just going to be in lanes where they're relatively long length of haul and maybe are anchored by big cities where it actually is a competitive dynamic. So it's a minority. That's why you can't say, well, intermodal is just going to be the relief valve for all of trucking and that's that. I mean, there's lots of places where just intermodal is never going to be able to compete.
Yeah, I mean, I think Mike had pointed out, Zach, that intermodal these IMCs say they can handle 20% more freight. We're only talking 1.5%. It can't be in terms of total truckload volume. I mean, this market moves 3 to 4% in a given week. So we're not talking about a big relief valve. Mike, I got to get your thoughts on this. Zach and I have talked about it pretty frequently. We're seeing the economy, particularly industrials, be reshaped right in front of our eyes. The center of the country is starting to really produce freight and is no longer dependent upon the coastal cities the way we saw during COVID. Is that helping rail networks balance more so than perhaps they did in the past?
Yeah, I think it is. I think that you've definitely seen improvement in the rail carload business, where in the rail carload business, that traffic almost always correlates with the industrial activity, and you're seeing that up about 2 to 3% year over year. There's a lot of sort of differences there in terms of just what rail cars are being used. Here's a graphic there, and the column that I like to look at is that central column, because you're looking at 4 weeks over the prior year 4 weeks, and so you don't have the noise from 1 week to the next, but a lot of those agriculture food products, I mean, those are going back the other way in some cases from center of the country to the West Coast or even north-south. And then you see the metallic ores and metals has been phenomenal. I mean, you rarely see that up, double digits. And then the only kind of drags are, some of the building, materials, and then, automotive has been kind of lackluster as well. So the rails, certainly the volume has, outperformed expectations for the railroads. I mean, going into the year and the fourth quarter earnings calls in January, the railroads were not expecting much in terms of volume improvement. They were basically expecting all their revenue growth to come from pricing.
Yeah, Mike, I'd love to know, like, this ores thing, is this a sustainable thing that you're seeing in the data? I mean, because it's kind of come from an area, a lack of expectation. We talked about the data center AI boom, but automotive is weak. And, it's almost like we're coming into an era where we're non-traditional things are occurring. Is there some sort of evolution here in an industrial component?
I do think it's all the data center stuff, because there's not a lot of evidence that, like you said, automotive is weak. And then we just saw on the housing side, the multifamily, which that uses a lot of steel and various metals, like that's started to turn over because rents in a lot of places have started to decline. So I do think it's a story about the AI center. And I mean, really, it seems like the only thing that can slow that down are the not in my backyard, issues in local places.
Yeah, but you also have defense spending. Yeah, I mean, even General Motors announced this week that they want to get into the Defense Production Act that Donald Trump, the executive order, passed. That's important. You also have, with the Defense Production Act, the building out of energy infrastructure, natural gas infrastructure. So, one of the things that people are like, well, this is just an AI data center. Okay, so what? It means it's still producing product and originating product.
And it's immune to interest rates.
And it's going on for more many years. Anyone who's watched it, I mean, look, you could look at SpaceX's IPO as a proxy for forward investment in data centers, because that's exactly what that capital is going to be used for. All right, closing thoughts, Julie. You don't have closing thoughts, Zach.
Reevaluate your routing guides.
What's that?
Reevaluate your routing.
Reevaluate your routing guides. Zach, closing thoughts?
Yeah, this market is here to stay for a while, so you might as well bear down on it. I'd rather know that I'm having a nail in my tire so I know how to fix it.
All right, I'm not going to be here Monday. You want to tease it? What we got coming up?
Yeah, this has been fun. All right, so we'll be back Monday. We're taking tomorrow off. We'll be joined by some amazing guests. We have Bo Bates, the CEO of the Evans Network of Companies, who will be live in studio, as well as Ari Silke, the new COO of 10, and Jason Pravancha, the CEO of Steam Logistics, will be in studio as well. So it'll be a great show on Monday.
Ari used to run Amazon Freight, so he will have an enormous amount of insights, just the scale of that business. So appreciate you coming in today. This was a great topic. I actually like this format.
This was fun.
Pricing analysts, people that were doing pricing, that understand the actual what it takes to do pricing, the thought process. We might expand into this in future weeks. Appreciate you staying tuned to FreightWaves Today. We'll be back on Monday. Remember, no show tomorrow.